Yes, I would say so. The market is coming to a rest since the volatile price swings in the beginning of this year, and from its March low around 25.50, we are seeing a rising trend. Prices are more, they are moving more, not much more volatile as the beginning of this year. So that's in line with the bull market. Bull markets are boring. And what's very encouraging is that recently we closed this downside January gap between 28.38, 28.52, and that's telling me that we should expect a break above the upper end of this market, challenging to new all-time highs above the horizontal resistance at 28.75 in the end. For the very short term, we see a kind of a consolidation, but as long as this consolidation takes part above the rising trend line, coming in around 28.13, and the rising 50-day moving average line and horizontal line, both around 27.95, we should expect an upward breakout above 28.75 and continuing and resuming the uptrend. We have short-term targets at 29.30, that's a very short-term target, but longer-term target 3,230 is still in line with an upward breakout above 28.75.
Now for the hard part, Roelof, because the market thinks that there could be the last party type of mentality, the last hours of the disco taking place before some sort of turn in the cycle. If you do see a pop in stocks, how fleeting will that pop be? Looking at the targets I just mentioned, I believe that a break above 28.75 would attract buyers, of course. That's a new phase that would suggest a resumption of this longer-term uptrend. You could say, based on a break above the 27.95 level in a couple of months ago, completed a kind of a bottom formation, and the size of this bottom formation suggests a target of around 3150 to 3200. So that's in line with our longer term price target coming in around 3130. So yes, I agree that this could be the final rise of this bull market because it's already so long. So there's a lot of bearish out there. I would not be surprised by a break above 28.75 in another short squeeze, and the shorts out of the market. So that would not be a surprise to me, but this would possibly be the final move within this longer-term uptrend.
A lot of technicians have been fixated on the topping process that appears to have been taking place pretty much since that high reached back in January, Roelof. Is that the clearest indicator that this market is now running on very thin air? I mean, you made an interesting point, I think, about whether we can see that pushback through 275. What's your assessment in terms of price and time frame?
Yeah, I would say particularly within the past few months, you see that the volatility is disappearing. And that's, to my opinion, encouraging because bull markets are boring. They are moving two steps ahead, one step back, and that's typical of bull market. And that's the phase where we are currently in right now. And besides, the close of the downside January gap, that's very encouraging because if a market is weak, it wouldn't fill this January gap. It would top much far below this gap, and then would take another dive towards lower levels. And that didn't happen. No, prices closed this gap in the past few weeks, and that's telling me that we should be prepared for this upward breakout, and that would attract new buyers, but I would not. I don't think that this price move will be very sustainable. We could see a rise for another couple of months, but again, this market is in its final stages of completing a larger top formation.